Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Michael Marks, founding partner of Celesta Capital, to discuss the VC investing environment in deep tech. Michael, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
All right. And as we know, the VC environment, it's been a bit challenged over the past 18 to 24 months, but it does create some opportunities. Where are you seeing this?
Well, actually, there are opportunities all the time in venture. And so what happens, when you have a bit of a downturn like we've had, is that the opportunities become more available to the companies and the firms that have money, which we do. In direct answer to that question, there's more technology happening around us now than ever in my career. So, in addition to the normal stuff that people think about with venture, there's a lot of hardware stuff and semiconductors and so on. But now there's the generative AI, which is creating a lot of attention. There's much more capabilities now because processing power has gotten better and the data streams are more available. And so there's all kinds of new companies there. Then in addition to that, there's an exploding world in biotech and biotechnology and molecular diagnostics. And there are so many things to look at now that it's just a target-rich environment. It's really fun.
Yeah, it's really interesting. The guest just before you, a biotech company, and we were discussing biomedicine and how it's leveraging AI. So, perfect point that you just made there. How does the shift that we've seen in the environment allow investors to diversify across multiple ranges?
Multiple ranges, you're talking about different kinds of technology?
Different kinds of technology, different, opportunities that you can find.
Yeah, sure. Well, so because it's such a rich environment now, one of the things that I think has happened in venture investing over the last, 4 or 5 years, you pick the time frame, is that so many companies have wanted to invest in software that I think a lot of investors have wound up with multiple vehicles investing in the same kinds of products, primarily software. SaaS has got to be a big deal and all that. And so, our recommendation for investors is look for orthogonal, positions. So instead of getting more software, look at the biomedical stuff, look at other kinds of technologies now, so that your portfolio is broader. And I think that what really has happened is that people's portfolios have really, really narrowed. And of course, that's one of the reasons why the returns haven't been so good, because you have so many companies, chasing the same types of businesses, and that's just not good.
That's a good point that you make. But what do you think about this valuation reset that we've experienced? It seems to me when we have folks on the show, we're hearing a consistent theme that startups and their VC advisors, they're back to core fundamentals about running a company, not simply telling a story or having an affiliation to, let's call it SaaS software, to AI, but it's profitability and governance and consistent revenue streams matters more than ever.
Well, you're exactly right. And actually, downturns are really, really good for the business, both for investors and for the companies themselves. For investors, the valuations are less frothy and, getting at better values. That's pretty obvious. But more important is how the companies operate in periods like this. You just pointed it out exactly right. When companies raise lots of money, they don't have the discipline, they waste the money, frankly. So now you're in a period where everybody's afraid their money's going to run out. And so what they're doing is focusing exactly where they should focus their time and money and efforts on getting the technology right, and less on go-to-market stuff. Companies are always spending money on go-to-market before they're ready. And that's gone away now. Everybody's scared about whether they're going to be able to raise money in the future. And so they are being very frugal. And that means spending their capital where it's most effective. And that's great for the business.
Yeah, it certainly is, but it's so interesting with the startup world because many of them are founders and CEOs together, and it's kind of like their baby, right? So it's certainly more personal than, I guess, walking into an established publicly traded organization. So with your role as a VC investor, Michael, do you work with your startup companies and advise management teams in addition to injecting money? How are you working with younger management teams where they perhaps have never seen volatility within their careers?
Right. Well, actually, it's part of what we do as a venture firm anyway, regardless of what the environment is like. We are very active with our companies. The general partners have all had operating roles, and so we're used to running businesses. And we do spend quite a bit of time with the companies, really helping to direct traffic, to be honest. Because you pointed out, most of these people are young in the venture world. They're young and generally inexperienced in business. That's not always the case, but that's normally the case. And they need a lot of help and guidance, and we're active in the companies doing that, helping them hire people, helping them focus their strategies or narrow enough to be successful. That's one of the problems. A lot of companies, go after, markets are big and they go after too many things, and we try to spend our time getting them to focus on what can we do in the near term to prove that this technology or service is valuable.
And I think that's such an interesting role that yourself, Michael, and others play within this space. I would imagine as a founder, it's so overwhelming. I mean, you can't be perfect at every single role that you need to fill, whether it's on the business side or the technology side, or if you're in biomedicine, the science side of it. I would imagine it's very overwhelming to get all of these lines to come together and form, a cohesive strategy. So it's really interesting what you do.
Yeah, it is. And of course, you just pointed out another thing that we spend a lot of time on is helping these young companies, build out a management team, because it takes these different areas of expertise. And a founder usually has one area of expertise. They're a scientist generally, or, a technologist of some sort, and they don't know much about how you do strategy, how you do marketing, how you do finance. And so we spend a lot of time building out the teams.
All right, Michael, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks.